Hey everybody, John Osborne here with Basecamp Trading. In the trading room, I showed and spent some time showing how to do an order for an option based on the underlying, and I wanted to repeat that here in the video so people can watch it and try to understand how to do it for themselves, because sometimes you don't want to really buy things based on the option price, but really about where the price of the underlying stock is. So in this example, what we have here is we have Apple, and I've drawn in a line here and where our entry point is, and let's say that we wanted to get into Apple about where the blue line is here at 142.46 or so, and we have a target right here of 141.88, and we have a stop up here above this high at 142.93. Now we can adjust this however we'd like. If we want to move our stop down a little bit more, we can do that, or our target, however way you want to do it. But what we want to do is able to enter a put, to buy a put when price drops below this line, and then we'll exit the put if we hit this target down below or if we hit this stop up above. Now the way that we'll do that is through a special order, and we're going to be trading the option, not the stock in this example. So I've already brought up the option table here. It doesn't matter which strike price you choose, but let's go ahead and we'll choose the 140. So what we'll do is we'll go ahead and click on the buy side for the ask of the put, and that'll bring up the price of 310. Now you can put whatever price you want in there. Sometimes it's easier if you just go ahead and set these as market, because we're not really basing our decision on the price of the option, but instead on the price of the stock. And we can also set this as a good till cancel. Now when you're setting this up, you want to set this up as a first triggers a one cancels the other order. So when I click on another item here, it's going to appear in here, or if I just try to duplicate this order, that'll appear in there. What we really want to do is replicate this order, and to do that I can just, once again, we clicked on the option. So in this case we're buying a put. What we want to do is create a couple of sell orders. So I'm going to right click and say create opposite order and do that twice. And what that does, it creates two other market orders for this specific put. Okay, now this order is all set, that if the buy order occurs, it'll trigger these two sell orders, which will then either take me out as a stop or take me out at target. So we have our entry, our target, and our stop. Let's go ahead and configure these, and what you want to do is click on the gear that will appear in this final column over here on the right. That opens up this extra window that appears, and we're going to buy this put, which is listed right here at market, good till canceled. And what we want to do is we want to choose a condition here. So we want to submit this when at least one of these conditions is true. We're just going to use one. When you click on it, it already fills for you the underlying, and we want to use mark at or below, and then we specify the price. So let's say this was about, I think it was at 142.50, let's just say. So 142.5, and we enter that, click save. Okay, and now we have a special condition that we're not going to enter this put until price of Apple, the underlying, drops below 142.5. Okay, now we need to set our targets up. Our target is at 141.57, so let's set that one first. We click on the gear. Now we want to exit if Apple is at or below, in this case 141.57. Okay, and if you wanted to, you could take a couple of pennies off of that, or whatever makes sense. And then finally for our stop, we have 142.93. Again, these are all market orders. You could change them to limit orders if you really wanted to put a little extra level of safety. In this case, we're going to choose at or above, and we're going to say 142.91 in this case. Okay, just before that point there. Actually, I'm going to make that 95. Let's fix that. I went the wrong direction in adjusting that one. So we just bring this up to 95. Click save. Now we can confirm that what we've done is correct. When you click confirm and send, you can look at the order summary. So we can see there's three different orders here. We have the order description and the condition for that order to be filled. Same with number 2 and number 3. So the order description here is buy one Apple June 140 put at market, but it's contingent on Apple mark being at 142.50 or below. Then once that triggers, and you can see here, order number one triggers this one. So this one's triggered by order number one, so is this one, and it creates an OCO. So it's these two are one cancels the other. And this one would be to sell that same put if Apple goes at or below 141.55. So this is our target. And we also have another one, this is the other half of the OCO, to sell Apple when it's at or above 142.95. Now again, these are all market orders, but we're using the underlying stock price to determine where we get in and out. And you can see the rest of the summary there, and we can click send. And when this happens, you can see that the orders appear on the order chart. Now, since they're based on the underlying and their options, they're not showing up at the actual prices. So you can't adjust them here. You can just see that they exist. But this represents the entry if we get down to this point, and this represents the two exits. And you can hover over them and see which part they are if you hold the cursor over it. And that's how you set up a contingent order. Go ahead and practice it when you paper trade. And hopefully if you enjoy these tips and tricks, let me know. And we'll see if we can create some more of them. I'm John at microquant.com if you want to send some feedback. And hope you have a great trading day.